Hey, good morning, everybody. Welcome to another day in Market Report brought to you by Mike Bjork. Today is Tuesday, July 1st. We do got a few economic news releases here. We'll start off with the CoreLogic Home Price Index for the month of May. So as you can see, here we had a decrease from 10% down to 8.8%. So the 10% was for April year over year, and then 8.8 is year over year from May to May of last year. Now, obviously, we have the other indexes all indicated that we are having a little bit of a slowdown. Still showing that home prices are going up. It's just not as rapid or as large as what we were seeing last year. Uh, the second item here is the market PMI. This is the final reading after the flash number. So we had initially the flash number was 57.5, and it had a slight decrease to 57.3. So pretty much in the numbers there, but not that far off. And then ISM for June, 55.4% in May. It's supposed to increase a little bit to 55.7, and it has slight decrease. So again, manufacturing is kind of really not a whole lot of movement, kind of stagnant in a sense. I mean, it's still showing it's going upwards because it's above 50, but yet it didn't show that it's growing even further as we saw with these two readings, previous and present. And then we got construction for month of June, and that one dropped a bit too. So a little disappointing there. We had 0.8% starting off in May, and the forecast was supposed to be pretty close in that range, 0.7, and it came in at 0.1%. So a little disappointing. So stock market's up. So they're kind of putting more of it on the stock. The different companies with earnings reports and different news on that side. So they kind of, it wasn't bad news because obviously they're within the range. It didn't show that much of a drop, but investors are kind of not cashing in because the stock Dow is up over 100 points so far this morning. And then also some other news. We got manufacturing showed some improvements. Their PMI in China showed some improvement, but Europe showed some slowness there. Bond market, we dipped a little bit, so the money's coming out of the bond market, going to the stock market, and as a result, prices are a little bit worse today. Again, these aren't huge swings here, so don't worry if we had, like, say, a 4% rate quoted yesterday. It's not going to jump like 4.5 today, or it's not like that. It's just the pricing in here a little bit, so maybe that 4% at no point maybe cost you a quarter point or less today. So it's kind of like that, this type of movement we're seeing right now, but a slight downtick. All right, but for the most part, because it didn't move that much, we probably won't see a whole lot of movement in pricing, in the interest rate, as you may see from your end. All right, folks, thanks for watching. I hope you guys have a wonderful day, and we'll see you guys tomorrow when we report tomorrow's economic data. All right, have a great day. Thanks again for watching.